So before we move on to the next, I kind of jumped into my report pretty quick here. Let's return to Dr. You want to do it after that? Okay.
Yeah,
Oh, go ahead. All right then.
David,
David, you want to go ahead? Oh, yeah, you can. Sure, tell them what time it is.
Good evening, everybody. It's that time of year again where we talk about the budget. As you recall, we changed the calendar so that we have 30 days to place this on public display, and it'll be down in our cashier's office. And we do the advertisement as required by law. As we do every year, we try to give you a little bit of an update of where we're at for the current fiscal year, which is fiscal year 2015. Our revenues are pretty good. We 8 state payments received, which is about where we were last year, so they stayed on a pretty good clip. Tuition was, as you recall, we projected it to be down 3%. We were off by 1. It's going to be down 4%. From what we've seen to date, there'll be a little bit more that comes in for the summer, but not enough to affect that projection. On the expenditure side, we are under budget, and we are under budget to date, and that our reserve and transfer goals will be met, and we are projecting that we will have a surplus at the end of this year, and I'll talk about that in a minute.
David, how long into the next fiscal year can you go to count payments for this year in the state?
We do that on an accrual basis, so they can go as far in the fiscal year. What we have done in the past, and some colleges have done, not just last year, but several years ago, if you recall, we used a 60-day rule. If it came within 60 days, we would apply it. Our auditors now want us to, even if the payment comes in October, and it's meant for the previous fiscal year, that it gets credited to the previous fiscal year. That would mean that it would immediately go to fund balance.
Good. Thank you.
Is there an end date on that though? I mean, that could really go out pretty far.
It would be unusual, highly unusual, to go much past 6 months, but it is Illinois.
That's right. That's what I mean. So, I mean, you do have to have some closure. You do have to have some certainty on your numbers. I mean, so.
And that's why in every audit presentation that we give every September, when we have those events that occur past that point, there are no financial statements.
So the ones we've received so far this year do not include any payments we received in this fiscal year, which were for last fiscal year.
That's correct. Okay, let's go on to the fiscal year 2016 budget and the revenue that we are projecting. Property taxes is pretty well set. Revenue is budgeted to increase only 2.2% or $1.3 million. That includes an EAV decrease of 4%. We've always been asked this question. I want to make sure to tell you every year our rate is now 31 cents per $100 valuation, and on a $300,000 home, on average, should be about $310. That depends obviously on the value of your home. We are projecting $100 million in new property. We hope that that does even better, but that is the best information that we have now. And as you probably already know, we had 1.5% CPI last year and 0.8% for the second half of collections, property tax collections. Please recall that is not the consumer price index that you often hear. It is just the change from December to December. I don't know why the state wrote the law that way. I think it was favorable at one time, but it does not provide a lot of stability in projecting property tax revenue. State funding, our apportionment was budgeted at $8.1 million. We were informed by the state that we would have been going up to $8.3 million from $7.9 million this fiscal year before we received notice of the 2.25% reduction. Now, please note that that reduction was budgeted for this year. We're being conservative and projecting that into going into next year, and we'll talk about future budget risks in a minute. On the tuition side, we are again projecting to be conservative, a 4% enrollment decline. As you recall, we approved a 2-year tuition increase, and will be the second year of that, of $8. So altogether, our revenue, our tuition and fees are going to go from $121 per credit hour to $129, and that's a 6.6% increase. However, it's not generating as much revenue that we thought that we would because of the enrollment decline. It's only going to be a 2.1% increase in actual revenue from tuition. And there's just a little graph to show you that how much of our local property property owners contribute to the College of Lake County. About a third of our operating budget is paid for by our students, and the state is just a little bit over 8% of our budget. Some fun facts about our our budget expenditures. $102 million budget. It's only a 1.6% increase over the fiscal year 2015 budget. We have included the average salaries of 3.3% increase. It's only resulted in a 2.8% increase in our personnel. That's largely due to positions that have been filled from attrition from employees that have retired. Health insurance is going up about 5.5%. Where we significant progress in how we've been able to balance our budget was having a 4% decrease in our non-personnel expenditures at the college. All of our contractual obligations are being met, both personnel and non-personnel. We do have a little bit more contingency in this year's budget to try to buffet ourselves for any revenue changes that may occur. And again, we still have our $5.7 million for debt service for the master plan.
David?
Yeah.
What percentage of our budget is considered non-personnel expenses?
Personnel, and when we say that, we like to, it's appropriate to say both salary and healthcare is about 76%, so about 24%.
So there was a 4% decrease in the 24%.
Of that total dollar amount, yes. In our on the personnel side, we like to show positions. We have deleted 19 positions. I'm not going to read them all to you. There's a presentation there for you, and we have added back 13 positions. And I think in almost every single case, we have reallocated funding for these new positions. So not only was there part of that 4% reduction in non-personnel, but we put that money where our newer priorities are at. And there's a big pie chart of how we break this down, and there you see, Barb, that salaries are 61%, and employee benefits at 13%. And there are all the individual items that break down the non-personnel items for the budget. Major capital spending, we do hope to, and we always project this on the high side so that we have enough cash available, but we are projecting to spend $48.9 million next year on capital spending, $12.4 million at the Science Building, still just planning money at Lakeshore, a total of $34.8 million in master plan projects, and our deferred maintenance budget is at $734,000. Fund balance. We are right now projecting that year-end surplus will be about $4 million. More than half of that are from personnel lines. As you recall, we've been holding vacancies to be prepared for this year's budget. We have dedicated the surplus to one-time master plan projects, and we do expect the fund balance going into next year to be 32% of operating expenditures. We always like to tell you about budget risks. Obviously, enrollment could go even further down, but we're going to think positive about that. We are not at all confident in the 2.25% reduction in the state aid. I don't think anyone is confident in what's going to happen with the state at this point, and that's not really news to any of you in the month of May in the state of Illinois. There are 4 pieces of legislation to freeze property taxes in multiple different ways, including current years, which would require us to go back and cut this budget that we just put out in front of you. I don't know. Our best information is that they're having trouble getting out, but I still think it's important to let you know that legislation is out there. Then on auxiliary revenue as well, as we've always told you before, particularly with the bookstore, that we are projecting at least a 30% reduction in our bookstore revenue in the coming year. And then, of course, we always need to be concerned about pension legislation. We don't know if that will impact us locally here.
David, is the reduction in the bookstore revenue because we're eating more of the cost for the books for the students like we had talked about, or a different reason?
I believe it's mostly competition and online competition at that.
So we haven't done anything to help ease the burden on the students with the purchase of books? I know we've talked about this several times.
Well, we've done 2 things. We have purchased what is called data crawling software. We go out every day during the peak season and search for the lowest price of a textbook, and we match it here. And so that's dramatically affected our revenue and helped the students' pocket. We've also formed a bookstore task force to be prepared for how we open our new business, our new bookstore a year from now, and we hope in the next 6 months to report to you what we think that we can do to going forward that I think will help not only the college but the students individually.
Yeah, anything we can do to help ease the burden of the cost of textbooks, as the students have told us time and time again, sometimes the cost of the textbook is more than the tuition is.
And there are just a couple of other things that some faculty are embracing OER. It's slower than I would like, but we're working on that. The other thing that many of our faculty are doing are looking at customized textbooks, where they're only ordering the chapters that they actually need, which also then reduces the cost.
Great.
Yeah. I should mention too, David, that David mentioned we're going to have that committee that will look at the bookstore, the future of that and the finances. And then at our governance coordinating council meeting, we mentioned that, talked about it, and also introduced the idea of having some teams in the college also look at ways to save on costs. So we're going to be doing that over the next year, but really thinking more in a long-term vein also with some of those costs. So that came out of our discussion with the board at the finance retreat. So that's right.
Okay.
Okay, and we have just some other funds, auxiliary funds. Our 2 biggest things in there are the bookstore and WPEI. The profit on the bookstore is $247,000. A total subsidy to the auxiliary funds is budgeted at $907,000, and that the largest amount of that is for the benefits of the employees that are paid for the auxiliary fund, except for the bookstore. Those are counted in the bookstore net amount. O&M restricted is where we budget all of our capital funds, and Fund 6 is our grants fund, and we always keep that balanced. Any questions?
Question. When you are segregating the expenditures for 2016, capital outlay, does that include the finance charges for our bonds and stuff like that?
We
Where
typically
is-
will have
where's the
that in
debt
a debt
service
service.
number? The debt service number, where is that?
The debt service is in the transfers.
Oh, yeah.
The transfer.
So 7% is a big number. I gotta believe that debt service is about 6.5 of that. Is that, I mean, it's a big number.
5.7.
5.7 of it?
Yeah.